Hi, everyone. Today is February the 6th, and this is the Moneyball Morning Report for the Benzinga Pro platform. I'm sort of melding everything together. Feedback has been, hey, I get a little confused about what to look at. Help me understand what's going on. So I pulled everything into TrendSpider, and I'm pretty sure it's going to be, a nice way for us to look. Okay, so our trade state is neutral to bullish overall. On the daily charts, we can see that we're very bullish, right? We're above our ribbons. Let me show you what lines I'm using here. I don't want to make these so esoteric that you feel you're learning something new. This is an 8 and this is a 21, and they're both simple moving averages. They create our moving average ribbon. And then within that is the Keltner band. And the middle of the Keltner band is this very light line. I don't want things to get too busy for us in general. And this line right here is our VWAP, right? And so here's what we can see. From the SPY, we closed lower. We danced around this VWAP and then recovered it. The VWAP is a little bit flat over the last 3 days. That's normal. We're making lower highs and higher lows. So if this is some sort of pennant or wedge or triangle, it's very likely to break in the direction of flow. But I suspect what we're doing is trying to test the breakout zones that come anywhere between 491 and 489. That is my overall focus. So how do we trade this intraday? Now, if you have TrendSpider or anything that gives you a mechanical flow like this, what you're looking for is the volatility band for a VWAP. And that's what this is doing, right? This is giving us a volatility band. Why do I say it's neutral to bearish? I'm going to draw a line over the last 3 days. And you can see today, neutral, yesterday, neutral, day before, expansion. But still, I can draw a line and cover so many different candlesticks. What I am doing is making higher lows, and that does not need to be ignored. That becomes very, very important with trend. Okay, so what do you want to do in this kind of trend? You want to buy the dip, comes into 491. You look for your 492 zero DTEs. It gets into 494-ish. You can say, hey, I want to take my puts on the zero DTEs at 493. And then if it continues to make higher highs, you immediately get out of them. But buy the dip is going to give you the better formation overall in the chart today. All right, let's go to the cues. I certainly hope this is becoming a little bit more clear. I really struggle with getting the weird things that float around in my brain into simple and straightforward things that I want to share with folks because I love sharing these wonderful mysteries that sit in these charts. Okay, now let's look at the cues. Much stronger, still higher lows. This yesterday was one of the higher closes that we've had, and we're sitting in kind of a doji space right now. Okay, so we see momentum is generally, that's my regression curve, but you can use MACD, whatever. It's kind of flat, but everything says buy the dip. I mean everything. So that's what we're going to do. Let's go to the 30-minute and work this out. Right? Let's tighten this up a little bit. Why do I want to say bullish to neutral? Because again, we're moving kind of sideways. We break out, hang tight for a couple of days, tight compression, major expansion. What, Anne-Marie, what about up here? We don't know what's going to go on up there. Do you have something? Listen, you can use a Fibonacci. Right? Sends you to 432 and 434. But again, the Fibonacci just says, here's an estimation of where price might be going. Trade in the direction of trend. Do not trade the reversal of trend. Okay? That's what you really need to take away from this. Okay? All right. So what do? We buy the dips. Our momentum tells us that it should be somewhere around 426, 427. So you can buy the calls, the zero DTE calls. When it gets down here, you buy the 27 or the 28s. And when it gets up here, you can try the puts. But if it immediately has a 30-minute candlestick that gives you another higher high on the fade, you just need to get out. Okay? I put the levels down there for you. I don't expect range expansion today, but if it comes, well, that's a different color, isn't it? My brain is not showing that up. All right, so let's go to the daily on the ES. Take a look what's happening. We've got all kinds of price action that says, listen, just buy the dip. Just buy the dip. It's above the 8 EMA, right? That's huge. Sideways VWAP tells me dips are likely, spikes are likely, reversion to the mean is also likely. So when you take your trade, your 0 DTE or whatever, your goal is to use the strike that's going to sit in the middle of the band. That's going to give you your biggest risk for reward. Notice what's happening here as we come in to the ES. It's at the top of this band on a 30-minute, but the price action still says, you know what? I'm above my VWAP. I'm above my moving average ribbon. That's this little tiny thing in here. The VWAP I've turned pink to separate it out. And it says, listen, you want to buy the dip. Slope of the linear regression curve, that is also saying, listen, buy the dip. But listen, we just had a spike. So buy the dip means wait for the formation to test old support and then pick it up. 49.66 to 49.68 was a really tough line for us to get over. And in fact, yesterday when we did it, we really didn't stay up over there very long. So I want you to be super careful there and watch out. Okay, that's what we're looking. See how this band is already starting to accelerate and get wider? I suspect we have ourselves another megaphone. What happens with a megaphone? Have a look. The volatility bands expand. Notice higher highs, lower lows, and then coming back into the mean. Okay, so in volatility expansion events, if you take event contracts, if you take 0 DTEs, you want to position your strikes in the middle of the noise. Okay, all right, listen, let's get to the NQs. Let's hope I have that in the right color. Oh, neutral to bullish. This is one of the ones that is really trying to press to the north. Okay, here's the thing. This number here, 17,739, topping formation yesterday, bounced into higher levels in the pre-market, but a collapse that brings it right down into major support. What's it telling us? We don't have nice clean trend. So it's going to punch up here, but then likely fade and not break away. Now, if it does break away, what are you going to see? The volatility bands are going to continue to expand. You're going to stay up over 740, and then you're going to breach this 775-ish, 773, 775, and then shallow pullbacks off to the races. All right. I see dip buying as the thing to do here. Could the dip end up being just one standard deviation away? Maybe. But it could end up being almost 2.5, like we've got it here. So be careful. Take a look at the levels. Dip buying is the game. Notice, when do you say, Anne-Marie, where do I buy the dip? When it stops going down. What time frame do I use? Use your 30-minute to see where it's coming into the volatility bands. Wait for it to start heading higher and then say, okay, there's my risk. So there's a 10-point risk down here in the pre-market as you get into there. That means you got to pay attention. Look at this 17,739 area, rejecting it at the first pass. But if it gives you a higher low here, it's going to break on through to the upside. So now you're looking for a very likely position there. All right. Hope that this format is better for us. Would love your feedback. I sort of obsess about trying to get it right for all of us. And so take care, and I'll see you on the streams.